Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Tomorrow is non-farm payroll. The expectations are for an increase of average hourly earnings by 0.3 month over month. So keep an eye on that. That's what everybody's been watching so closely. If that comes in stronger than expected, it's going to lift the dollar up. The dollar index finished today right at support once again, right at that 97 mark. 97 down to about 96.75 is the level of support. Now for the euro, on the flip side, again, 113.18. That was yesterday's high. It matched it today. The ECB held their policy meeting today, this morning. Now they did talk about the TLTRO, laid out some landscape for that. More importantly, in this statement, they did say that the ECB does not plan on cutting rates until the first half, or until after the first half of 2020. However, Mario Draghi, in his press conference after that, did say that they are willing to use any means necessary. So it was implied that they would or could cut rates sooner if growth called for it. What we did see was a sharp rally to 113.18 in the euro after the policy statement, but it did dissipate after Mario Draghi's comments. So we saw the volatility across the board in the ECB meeting. We expect this volatility to continue through tomorrow. The data in the U.S. today was not that great. Weekly jobless claims came in higher than expected. Non-farm productivity came in lower than expected. So we go into that the jobs report tomorrow. Average hourly earnings, like we said, looking for an increase of 0.3. If it comes in below that, we're going to see the dollar potentially break down. And now for the euro, remember, there was a trend line that it's failing against on those rallies. It could get out above there. Look at the job growth. It's going to be important. Looking at expectations right around 180,000. However, ADP payrolls earlier this week, they came in so bad that a bad number on job growth really may be ignored for more focus on the average hourly earnings. Overall, you're seeing the equity market rally again today. It's put pressure on the Japanese yen. The Japanese yen is hanging against support, that 91.80 to 92 level. So watch that. If the equity markets extend that rally on Goldilocks number tomorrow, the yen could likely see further losses here into that support level, finishing above 92 by 92.25 right now. So watch the yen. There is going to be some good value. The safe haven markets in general, the treasuries, the yen, gold as well, have had a fairly good week. The yen not so much though, but the gold did extend to the high of the year for the front month contract, settling in just a bit. So see how the overall markets and risk sentiment react to tomorrow's data, and that's how we'll see how things move on that safe haven front. Now, looking at the commodity currencies, the Aussie dollar, it is just hanging in a bit. The 70 mark continues to be a major 3-star resistance level, and it did not get out above there. See how that number tomorrow again moves. The U.S. dollar is going to affect the Aussie, and then the Canadian dollar. You do have the Canadian jobs report tomorrow. However, the Canadian dollar, an outside bullish move today on that late rip with crude oil. Crude oil had rallied sharply into its settlement price at 1:30 p.m. Central Time. The Canadian dollar did get some support from that, but overall, as you're seeing in the news, some progress on the U.S. and Mexican talks about potential tariffs next week. Give us a call, though. We're here to talk about anything on the board before or after non-farm payroll tomorrow. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial to research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.